homebuilders are sounding the alarm bells about demand for new houses. This week, D.R. Horton, one of the nation's largest home builders, sounded the alarm. Demand for new homes is softening significantly. Traffic in model homes has thinned out a lot. And contract cancellations have spiked. And the company is having to make some tough decisions regarding land purchase contracts. This probably does not come as a surprise. Many pundits and YouTubers have been sounding the alarm bells about softness in the market for existing homes. The United States is teetering on the brink of a recession. And a record number of new houses are coming onto the market in many cities. Now, over 25% of new home prices are discounted. Rising interest rates have caused homebuilder confidence to tank. The average interest rate on the 30-year fixed mortgage was more than 7% this week. That rate was 3% at the beginning of this year. Persistent inflation is causing higher costs for labor and materials. Higher costs for land are driving up development costs. So, new home builders are caught in a market squeeze. Redfin CEO Glenn Kelman is predicting the biggest U.S. housing crash since the Great Recession. Sensing that home prices are in free fall, home buyers are now pulling back from the market. But, guess who is stepping forward to buy houses in bulk at rock-bottom prices? You guessed it, Wall Street. Now that all of the doomsayers are setting the narrative. And home flipper blood is running in the streets. Private equity, Wall Street banks, and corporate interests are gathering their cash. They want to bypass the usual home building food chain. And make build-to-rent deals to buy in bulk from homebuilders and house portfolio holders. So, is this a good thing? Will it even work? Or will these moneyed interests fall victim to a further crash in the housing market? What does this mean for new home development? What does this mean for the future of the economy? And, what does it mean for the future of the United States? But, before we get into that, please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. JPMorganChase has formed a new venture with $1 billion real estate developer. The partnership is morphing America's largest bank, America's largest landlord. This starts with thousands of U.S. rental homes. JP Morgan announced that it has formed a joint venture with Haven Realty Capital. The joint venture will purchase and develop entire communities of new homes. It is starting with 3 communities in the Atlanta area. Enough capital to acquire more than 2,500 single-family rental houses will be invested. The build-to-rent, BTR, gained immense popularity during the pandemic. Actually, it paired 2 separate but willing constituencies. COVID-quarantined city dwellers were eager to move to the suburbs for more space. Real estate investment funds ready to capitalize on this by developing full-on, turnkey communities. A community is far easier to manage than a disparate group of properties spread across multiple parts of a city. Under the BTR model, housing developments are built on spec, which means without an agreed buyer. The builder tries to get a property management company to buy the entire community of houses as a block. Then, the property management company rents out and maintains all of the community's properties. It is somewhat similar to city rental markets. With the exception that freestanding single-family homes take the place of apartment units. The amount of rental houses increases when property prices and mortgage rates soar. This year, both factors are rising aggressively. This is the worst time in my living history for the home buyer, said Moody's Analytics chief economist Mark Zondi. This costly combination loaded home buyers with a 74% higher loan than in 2021. The difficult market has fueled the rise of alternative home financing solutions. These are solutions that are attractive to people who maybe can't qualify for a mortgage. Or, at least decide that they do not want a mortgage under the current market conditions. Rent-to-own is one of the growing trends. But that business model could be putting customers at serious risk. But house prices are already falling in many U.S. cities. So it is questionable whether investing $1 billion more into BTR is the wisest move for JP Morgan. JP Morgan invested $625 million into its first BTR deal back in 2020. That was with a different operating partner, American Homes 4 Rent. Haven already owns 3,500 homes valued at $1.2 billion in 35 communities. Most of these houses are completed. But, some under construction. JP Morgan's injection of capital could increase that portfolio by 70%. Haven founder Sudha Reddy says that now is the time to invest. Home building is basically grinding to a halt as home builder confidence collapses. Reddy says that this is an opportunity they should exploit. The for-sale housing market has been significantly hampered by recession fears, inflation, and rising interest rates, Reddy said. Weak macroeconomic conditions are placing a burden on home builders and their ability to add to the housing stock, Reddy says. Haven will look more attractive to home builders by partnering with a huge bank like JPMorganChase. Home builders are becoming increasingly comfortable selling entire communities to a single rental operator like Haven, Reddy said. These are the early innings of this type of business arrangement, Reddy continued. I expect business to grow rampantly, Reddy also noted. JP Morgan could be in the process of morphing into America's biggest landlord. Since it's pursuing this via BTR, prospective home buyers can shrug off fears of having to outbid a wealthy financial giant, Reddy said. That doesn't mean the new venture will not affect certain kinds of home buyers. The focus of the new business venture is on new mid-size housing developments. These homes are in the range of from 1,500 square feet to 2,500 square feet. Our ideal home has a 2, 3, and 4-bedroom floor plan with a 2-car garage, said Reddy. The average American house is 2,480 square feet. So that means that these new rental communities compete in the middle market. This includes everything from solidly middle-class houses down to suburban starter homes. And this is typically the category of houses whose would-be buyers might struggle to qualify for competitive mortgage rates. The first phase is a community of 250 homes. This group spans 3 communities in the Atlanta metropolitan area. Reddy told Wall Street analysts to expect a deal announcement within the next 90 days. JPMorgan's asset management division is leading the partnership. Supposedly, this division is separate from the mortgage banking division. But it does raise concerns about the seeds for a conflict of interest. In theory, the same bank processing your loan application stands to benefit more in certain markets if you remain a renter for life. But, if you follow this channel, you already know that big home builders are losing confidence. We are now witnessing the latest examples of how quickly buyers are fleeing the housing market. D.R. Horton, the largest U.S. homebuilder, shared more details in its Q3 earnings call this week. Among the many notable highlights, buyers canceled almost 1/3 of all purchase deals in with D.R. Horton in Q3. That is up from 19% from Q3 of last year. Orders for new homes fell 15% to 13,582 homes as compared to Q3 of last year. And, those orders are down by 10% in deal value. In response, D.R. Horton is walking away from land deals that do not meet certain financial metrics. As we all know by now, the housing market has shifted. And get this, during Q3, D.R. Horton wrote off a whopping $34 million of deposits and other expenses tied to canceled land deals. On top of that, D.R. Horton is offering more incentives to sellers to close deals. If you follow this channel, you already know the economic narrative of the times. Inflation is raging in most countries of the world. Central banks are aggressively raising interest rates in order to stop inflation. As a result, there has been a historic increase in mortgage rates this year, sparked by the Federal Reserve's all-out campaign to tame inflation. The fallout has pulled back housing demand and crushed home builder confidence. The average rate on a 30-year fixed-rate mortgage is now 7%. Expensive borrowing costs have cratered mortgage demand. Mortgage demand has declined to a 22-year low according to the Mortgage Bankers Association. This has led to layoffs at banks, such as Wells Fargo. Needless to say, D.R. Horton quarterly results missed Wall Street analysts' expectations on earnings and revenue. That was also the case with Pulte Group in its Q3 earnings call. Order cancellations for new Pulte homes increased 24% in Q3. That was up from 15% in Q2 of this year and up 10% from Q3 last year. Pulte purchase contracts fell 28% from Q3 of last year. Homebuilder sentiment for the U.S. single-family home market has now fallen to half what it was only 6 months ago. Zillow has sold its portfolio of properties at a substantial discount. Zillow stock is down almost 70% from its 52-week high. The CEO of Redfin has warned that his company is quickly selling off properties in its portfolio. Redfin stock is down over 75% in 2022. The United States housing market is at a significant inflection point. Boise, Idaho is 72% overvalued. Austin, Texas is 67% overvalued. Ogden, Utah is 64% overvalued. Las Vegas, Nevada is 61% overvalued. Atlanta, Georgia is 58% overvalued. Phoenix, Arizona is 57% overvalued. Experts predict that house prices could fall by up to 25% over the next few months. Home builders are canceling new building projects. Housing developers are seeing the pace of new home site visitors is slowing down. Customers are canceling contracts. This could lead to the perfect storm that culminates in a foreclosure crisis. On the positive side, this could be an opportunity for first-time home buyers. But, what do you think? Please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.